Welcome to Nasdaq TradeTalks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining me for this segment, we have Ian Macomber, Head of Data Science at Ramp, Roy Hefer, Chief Financial Officer of TravelPerk, and Steve Taylor, Vice President of Finance and Strategy at Zendesk, to discuss how the travel and office spending environment has changed with inflation and interest rates, as well as the evolving role of the CFO and other senior management within the finance function. Gentlemen, it's great to have you with us. Welcome to Trade Talks. And I want to go around the horn first, get your high-level overview with your perception of current spend trends and the macro and where your company sits within the ecosystem. Ian, with Ramp, we'll start with you.
Awesome. Thanks so much for having us. Yeah, so I'll give a quick breakdown of Ramp first. So Ramp is the ultimate finance platform for modern finance teams. We have corporate cards, bill pay, a lot of the stuff you expect, as well as a new layer of intelligence software that ranges from large language models to everything else. We also do procurement and vendor intelligence. And so largely, we have visibility into almost all corporate card spend and accounts payable. And so what we've seen in terms of businesses and economies is largely that, when you look at April 2022, when rates were first really raised, the first thing to come back really quickly was ad spend. So we saw a lot of businesses on Ramp that had gone from spending 30% of their budget on marketing, that dropped all the way down to 15%. It has not gotten back there yet. It's been flat for a long time and it's starting to go up. And so that's one thing that we see is of all the spend habits that people have on Ramp, marketing dollars are usually the first thing to go when you see the interest rate spike. And we're just starting to see that start to come back now.
Mm-hmm. And Roy, with TravelPerk, again, where you sit within the ecosystem and your perception of what you're seeing in the macro environment as it relates to corporate spend.
Absolutely. Thanks for having us, Jill. Great to be here. So first of all, we just closed a $100 million financing round led by SoftBank, which we're extremely proud of, which is a great validation for what we've built. And more importantly, it's a great step in our journey to build the world's #1 SaaS B2B travel platform and continue to expand our product and presence in the United States. What we see is fascinating. I think we're essentially business travel is back, first of all, for sure. There's no question about it. Anybody who's been at the airports recently can tell you that business travel is back, and we see it in our data. When we look at pre-COVID cohorts, their travel spend has gone up 20 to 25% today relative to 2019. So there's no question that business travel is back. The fascinating thing is I think it's a bit different than what it used to be. And what I mean by that, we're essentially in the intersection of 4 key macro trends, right? So remote and hybrid work is the new norm, which means most companies today need to have their employees fly or travel one way or another to meet each other and have business meetings, build company culture. So if you think about it, companies are essentially shifting real estate cost into travel spend. That's number one. Number two, with interest rates going up, cost of capital has gone up, which means people are paying much more attention to how they're managing their budgets and how they're managing their employee travel. Number three is inflation, right? Which is thankfully starting to cool down now, hopefully. But travel today is more expensive than what it used to be in the past. We've seen an increase of about 20% in average booking value in the US between today and 2 years ago. And last but not least, it's the weather-related and travel-related disruptions generally. So at TravelPerk, one thing we've seen is almost a 30% increase year over year in adoption of tickets that have flexible cancellation or change policies. So what it means, people want more protection for travel-related disruptions. So essentially, travel is becoming more frequent, more expensive, more unpredictable, and it's more important to get it right because of rising cost of capital. So people are paying much more attention to how they're managing their business travel, and both because of the impact on the P&L and because of the impact on the employee experience. So I think it's a fascinating time to be in the travel industry.
Well, I'll tell you, for someone who travels for their job, it definitely feels busier and appears to be busier than it was in 2019 prior to the pandemic. Steve, from your perspective with Zendesk on the overall environment and where you guys are.
Yeah, Jill, thank you for having me. So I'm Steve. I work at Zendesk. We're a customer support software company founded in 2007. So what we're seeing internally from a travel perspective, absolutely the pickup to Roy's point. We are traveling more than we were several years ago. We did a pullback in COVID on real estate, and we're definitely seeing that mix in reinvestment. From an overall Zendesk company perspective, our business model is based on seats. So we land a customer and the customer adopts the licenses to provision for agents and customer support. So we saw tremendous growth and expansion business prior to the pandemic. The buying environment became a lot more measured in 2022. But what we've been seeing over the last 6 to 9 months is there's definitely been a pickup. There's a lot of business out there. And I think and what we've been working through is demonstrating the value through incremental products around AI, around workforce management, security. So I think what we're seeing from outside of travel, just in the overall business environment, there's definitely a lot of appetite right now, but there's just a few more gates of reviews and approvals and consideration, but it's still a healthy buying environment from what we're seeing.
Right. And it's interesting that you bring up AI because you can't have a conversation without referencing it. How is AI impacting the industry in which you sit?
Yeah, it's a pretty incredible time. Zendesk is out in the market right now with some Gen AI solutions. So, you log in as an agent, it'll have recommended responses, chatbots, and all those kinds of things. As we look towards the future, there's a lot that's going to be happening on data models. So when you think about interacting with a company as a customer, there's a lot of process stuff that starts to come up when you interact with them. So I think it's going to go away from the conversational piece and more towards actual data and how you can actually solve customers' problems. So I think there's a total shift to how customer support is going to be done over the next 5 to 10 years. And that's what Zendesk is really trying to be at the forefront of that.
Right. And Ian, of course, being a data company, AI is nothing new to the business, but how are you seeing it impact now that it's a constant theme across all verticals?
Well, absolutely. And
yeah.
I'd say largely this is, not a controversial take, but I think really at the end of the day, the data is the most important thing. You can see every single month, OpenAI launches something new. And then every month after, open source catches up with something that's about 98% of the way there, but that runs on a MacBook. And for us, actually, one of the biggest areas that we're excited about is procurement. And so we actually just acquired a company called Venue, some former Ramp employees, but we do a lot of procurement, and it's largely based on using large language models to process invoices. And so as an example, the very first time you get a Salesforce invoice, you don't know what it costs. That's like something that's quite price discriminatory, it's opaque. But from a CFO's perspective, you have to manage maybe 80 or 100 of these SaaS tools. And that's definitely what we see. And so previously, right, there's sort of this enterprise, click here to talk to sales. It takes a lot of work, and you never understand if you're getting a good deal. But we've seen that by arming customers with lots of data points on contracts, as well as large language models to understand the important parts, right? What are the terms? What are the seats? What's the platform fee? These are all areas where I think CFOs are going to be making much smarter decisions when it comes to procurement in the years to come.
Right. And Roy, if you could follow up, please.
No, absolutely. And I agree with Stephen and Ian. I mean, I question, frankly, if you're a technology company today and you're not using AI and leveraging, large language model, I question if you're really a tech company. AI today it's not more, it used to be a buzzword, then it became like a cool party trick. Today it's real. If you're not using it, and I can tell you at TravelPerk, we managed to nearly double our gross profits last year by leveraging AI and technology to actually enhance the productivity of our workforce while continuing to improve the customer experience. So it's a win-win. It's really essential in order to improve the output of your business.
Ian, I want to go back to you for a moment here because you had mentioned the evolving role of the CFO, and I think that's a really critical part of this conversation. How are you seeing the role evolve? Is it strictly within the finance function, or are you starting to see it, branch into other areas like risk management as an example? How has this role evolved?
Yeah, absolutely. So, when you think about the CFO and a bit of the hierarchy of needs, this sounds relatively trivial, but a very important part is just making sure that payments go out when you intend them to the people you intend them to, for the amounts that you intend them to. These are things that really do take up quite a bit of time. They're not strategic in nature. And really what Ramp is trying to do is automate those whenever possible, add context whenever possible. And so I think one of the biggest changes that I think we're predicting in terms of what a CFO does is, instead of allocating dollars for something, you start to allocate something that someone's asking for. And so an example of this is, previously we might say, hey, all employees are going to have $500 budget to travel to New York. what we've sort of seen is that doesn't actually really make sense. And there's like a couple reasons why. I live in Boston. I can take the Amtrak down. It never costs that much. We have people in Seattle. It always costs them more. That policy doesn't make sense. Some other things that we know just sort of observationally, you should probably never have an offsite in New York when the UN is in town or during Fashion Week, because the hotels are much more expensive. So these are things where previously a CEO or CFO might have allocated dollars. Now they're allocating a thing, which might be an offsite. And increasingly, that context is going to come from the tools and SaaS providers that they use.
Yeah, and I think from TravelPerk's perspective, it's interesting to get, your bottom line take on the CFO, because it really is interesting to hear from three different people how their perception of their function is evolving.
Absolutely. Look, I think 20, 30 years ago, the CFO was mostly focused on accounting, right? So for each kind of fiscal period, you would look back and say, where are we? How did we finish that period? And basically a scorekeeper for the company. I think the fascinating thing today is the CFO role is much more strategic and forward-looking. So it starts with being a trusted advisor to the executive leadership and the investors, and spending much more time on shaping the future direction of the company. Like, where do we actually want to go? Then making sure we know how to get there, and there's a clear plan, and we know how to measure the way to get there. And maybe most importantly, making sure that everybody at the company knows what their team needs to do and deliver in order for the company to hit their goals. So I see the role as much more like a business performance officer, much more than a pure finance officer. Like, the question that I'm asking myself when I wake up in the morning is, are we on track to hit the long-term targets? And less worried about specific accounting nuances. And by the way, I love it. I would probably not have taken the role of the CFO 20 years ago.
Well, it's interesting that you say that, because Steve, in your notes as well, you think of the CFO as should be more solutions oriented versus just, counting the budget and saying yes or no to deals, but should be thinking about solutions and taking the silos out of each business unit and thinking of longer term strategy.
Yeah, when we think about how our team operates, we get to see information. So there's a foundation of accounting, operations, all of these aspects in the CFO's team. We see leading indicators that look 6 to 9 months out from Roy's perspective about long-term planning. So we're definitely doing long-term planning. We're looking at the markets. We're looking at the product strategy fit. We're looking at how we're developing the sales and marketing teams. So we're trying to interlock everything with the strategic planning, everything like Roy said. But I also think about the access to information when I think about what I'm able to see now on a day-to-day basis versus 3-5 years ago even. There's so much information coming out through the finance team. So being able to distill that into actionable insights and a path forward for the management team and the board is huge. And I think that has grown significantly. I think all the accounting stuff has not gone away. It's still super important, but I just think the amount of information that the CFO can lead in the company is really giving an opportunity to take a more proactive stance.
Right. And let's go back to the bottom line for a moment, thinking, I guess, what you would call your traditional CFO hat. When you think about business travel and travel spend, it really does impact both the P&L and business outcomes. Explain to us why it's so impactful.
100%. So first, P&L, again, when travel is more expensive and it's more volatile, right? So there's more changes and cancellations and things like that. And on top of that, it's more frequent. So you need your employees to travel more often than what they used to do in the past. And again, with the rise in cost of capital, all of that just exacerbates basically the issue. So that's on the P&L side. On the employee experience, I think in the future, people would ask, what travel platform are you using? In the same manner that they're asking, other than getting their payroll and salary and stock option information, they're asking typically what benefits you have. And they want to know about healthcare and things like that. I think people will pay more and more attention to the actual travel experience because it matters. It matters if you can get a world-class customer care team take care of you when shit happens, you're stuck in an airport, versus having to try to call into some weird customer center and not get any response and things like that. So I think it becomes a more important part of your P&L and a hugely important part of the overall employee experience today.
Right. And Ian, when you're taking a look at all the data that's being ingested by Ramp, would you say that there are some, ways to discern what's happening in terms of business optimism and overall macro themes that are taking place in the market?
Yeah, absolutely. And one of the fascinating things that we can see in our travel data is it actually changes quite a bit by stage of company. And so I might be reading a little bit too much into this, but when you see companies that are very young, some of their first expenses are on offices and on Apple. They're buying computers for their employees. They're doing work in person for the first time. Then you start to see them add SaaS tools like Salesforce. They're starting to work with people. And then maybe at Series B or C, you really start to see, United and American and Southwest start to go to the top of the list. So these companies, are now out there. They're going to conferences. They're signing deals. Maybe they're going up market where you do have to increasingly meet in person. So I think that's one of the big differentiators that I have on travel, which is to say, any size company, you can have your employees fly in for an offsite. That's going to be important. For that, you should really try to be cost conscious, figure out what makes sense, figure out what doesn't make sense. There are other situations where you're just going to have to bite the bullet. So for example, if your company needs to be at AWS reInvent, guess what? Hotels are going to be expensive, flights are going to be expensive, but that's a cost of doing business. And so we see only later stage businesses that are ready to go after enterprise being willing to spend that kind of money.
Yeah. Have any one of you noticed within your data or in the trends when you think about sustainability? I believe, Roy, you had brought up global warming and the volatility with climate, where we saw interactive maps during the beginning of the pandemic where you saw, carbon emissions, just New York Times had a great map with it. They just plummeted. And then you could see it slowly increase as we got into 21, 22, 23. And there's this big sustainability messages that companies are trying to commit to, whether it's carbon neutral, zero carbon. Has this impacted any of their business or travel spend? Or is it, we're back to 2019, we're not thinking about this as much, as long as we can get to the consumer, get to the conferences like AWS, get exposure? Are those business priorities outweighing what the sustainability message may have been? Whether yeah, right.
Yeah, I think most people, what we see is that people pay attention to it because it matters. It's another factor that people care about. I don't know that it has really influenced the actual travel behavior, but people want to make sure that they get the protection, that they do take care of the environment, because whether it's part of their business values or it's part of the just compliance and regulation in their local jurisdiction. So I don't know that it actually. I mean, obviously you have the anecdotal evidence in countries like France who are trying to limit travel and try to shift people to trains and things like that. But I think it's still early to tell in terms of how it's going to shape future travel. I'd say it's still early days on that front.
And Steve?
Yeah, I'll say, so Zendesk has a carbon offset program. So we try to offset the when our travel increases, so does the cost of that program. But when we think about overall travel, so we have a detailed travel document that my team socializes in the company, but the guiding principle is act in the best interest of Zendesk. And I'll tie that back to how it may impact climate. And this goes to some of the comments that Ian made as well, which is if we're going to have an offsite in San Francisco or New York, and most of the employees of San Francisco try to have the offsite there. We need to have good reasons to travel, whether it be going to meet with a customer, whether it be there's an internal alignment issue that needs to be sorted out. So I think combination of the climate goals that we have as a company, but also just being thoughtful about how we travel. So while the volume is growing, it's kind of thoughtful growth as we do that.
Right. And Ian?
Yeah, and when I think about travel as well, so much of what Ramp tries to do is save money, but we also really try to save time. If you think there's a ton of menial things that you can be doing, we try to automate that. I actually think that it's relevant for travel as well. I think pre-pandemic, if you were going to close a big deal, it just made sense that you were going to fly out in person and do a handshake. I think, frankly, our team at Salesforce still wants to do that. We're willing to do that if it's important. But I think what we've seen sort of across the board is people that are more senior are comfortable with Zoom calls, recognizing, hey, maybe we don't need to fly across the coast for this, certainly in terms of carbon, but I think also just in terms of time, it can be more productive and you can get the same experience.
Right. And Ian, in the last couple of minutes here, I'd like to go around the horn again, starting with you in 30 seconds, your longer term macro outlook as it relates to travel and spend, and just, how you think the macro is going to continue to evolve.
Yeah, absolutely. So I think there's one area where I see people paying a lot more attention, and that is on SaaS spend. I think people don't just look at year one spend increasingly. They're starting to look at, what am I going to look at in year two? How are companies going to add seats? If you look at companies like Snowflake, like CrowdStrike, they famously charge quite a bit more, or you end up paying a lot more in year two and year three. I think CFOs increasingly are going to be consolidating in those areas, and we start to see it in our spend already. Companies that are in the same stage of their life on ramp have fewer SaaS vendors and are not spending as much. The opposite is starting to be true for employee hiring as well as advertising. When interest rates spiked, we saw a lot of our businesses cut ad spend. Certainly, I think we did as well. We're starting to see that come back. And I think actually one of the big recipients is actually TikTok. This has been a more sort of nascent ad platform in years past. We're really starting to see that in terms of what they can deliver to companies, it's just as competitive as Facebook or Snapchat.
And Roy, your final thoughts?
Yeah, I think business travel is back. It will continue to grow. I think it will continue to evolve. And it will be, again, more frequent because of hybrid and remote primarily. But I'm very bullish about the outlook of business travel. I think it's an essential part of doing business, and it's a great time to be in the business.
All right. And Steve, we'll wrap it up with you.
Agree on all those thoughts on business travels, and want to close it up by saying, starting in early 2023, we got our procurement team and our finance team involved a little bit in the customer-facing processes, articulating the value of the product. So going a little bit more than the growth story and saying, here's the value you're going to unlock, here's how much cost savings you're going to get, here's a tactical roadmap. So I think as I look in the environment again, I still think it's a healthy buying environment, but the greater opportunity for the CFO to help bridge with the customer-facing teams to demonstrate value. I'm seeing a lot more of that as time passes.
All right, gentlemen, we appreciate the insight. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.